Welcome back. You're watching Buy Now Sell Now on ET Now, and let's talk about earnings. There's GMDC that came out with their earnings, but sequentially it was a weak quarter coming in for GMDC. Let's talk about the earnings and the way forward with the management of GMDC. We have Roopwant Singh, who is the MD of the company, joining us. A very good morning to you, Mr. Singh. Thank you so much for joining us on ET Now. And firstly, could you walk us through the numbers for the quarter gone by? There's been a significant sequential decline. If you could shed some light on what were the reasons?
Q2 has been slightly subdued because of heavy torrential rains and a threefold rise in the number of rainy days, which severely affected our mining operations. And we faced a lot of inquiries, queries. There was some winding down from many of our customers also who use our product. I'm talking of lignite. So that has affected Q2 on the production side, but on the numbers side, numbers are pretty good. We are in excess of 200 crores compared to last year. The percentages are there's a phenomenal rise. It was that would not be a fair comparison. But if you look at our half-year numbers, our revenue and profitability before tax, so we are almost at the level where we ended the last financial year. So yes, and this quarter, the rains have eased up. Yes, rains were intense, but they've eased up. They were condensed also. So they have eased up. And now we should look towards an aggressive third and fourth quarter with better numbers also.
Good morning, Mr. Singh. This is Vinny joining in as well. What I do want to understand is, do you expect Q3, Q4 to be better? Because in Q1, when you look at your profitability, that was around 350 crores. Now, should we expect the bounce back to come back for the same in terms of profit?
We took a very ambitious target of 10 million tons. And we are chasing that. Somehow there will be some correction in that because of Q2. But if we are able to sustain our promised production numbers in Q3 and Q4, and there's not a great deviation from in the international prices, our competitors, and where we have currently placed ourselves, I think we should be churning out good numbers, more on lines which were in the previous more robust quarters.
Right. Mr. Singh, let's talk about lignite pricing. Could you talk about the trends that you're witnessing on that particular front? Also, what sort of an environment are we dealing with when it comes to pricing for lignite? And also, what's the volume ramp up that you're seeing for the product?
Pricing, we have done very minimal tinkering in Q2 because there was a differential that we were working towards between our competitor imported coal and us. So that differential, broadly we were there. So we've not done much tinkering there. What we have actually worked on is better targeting, better focused customer retention. 1 month back, you would have noticed that we have changed the entire customer classification, which was a very simple and very rudimentary, small and large, two categories were there, and we were not able to price them appropriately. We have categorized our pricing strategy and our customer allocation strategy based on micro, small, medium, and then large and extra large. So this is one governance mechanism change, which has been readily accepted by our customers also. And the lowest level, we are giving them at a discount. But once this matures in the coming 2-3 months, we'll be able to take better views on the pricing.
Mr. Singh, what we want to understand is which segments are you actually expecting to see a faster recovery coming in? Certain segments of yours like mining and power have seen a sequential decline coming in. So how do you see that production ramp up actually shaping up there in the second half of the year? How is the demand holding up? What's your sense coming in there?
Demand is pretty good. In Q3 and Q4 this financial year and the first quarter of next year, the bulk would be driven by lignite sales. what we seek to improve are the realizations from our non-conventional energy assets. They have been, some parts have been underperforming, and corrective mechanisms were effected in the past 3 months. So when we forge new relationships with our vendors with more performance-oriented goals, you would see a better realization in the next wind season for our wind assets, which is 200 megawatts.
Mr. Singh, just in terms of your capex plan, not only for the second half of FY23, but also going forward in the next couple of years, what is your capex plan coming in?
The budget this year is in the range of 12 to 1400 crores, but you should see, and most of it is towards land acquisition. Yes, we are going to initiate further land acquisition beyond what has already been done in Bhavnagar, and we're going to undertake land acquisition in our new assets in Kutch also. So this will principally lead our capex expenditure. Whatever, there would be some capex which would go towards beneficiating the quality of lignite which goes into our power plant, and which goes which gets sold from our Bhavnagar asset also. One is the anti-pirate removal plant, a pirate removal plant, and the other is essentially an ash reduction plant. So this is the broad plan. Rest, there are smaller elements which are not really worthy of mentioning here.
Okay, that was Mr. Singh. Thank you so much for joining Unit Ask this morning. But GMDC currently trading almost flattish. Let's look at what the markets are doing.